I think we have successfully pissed off just about everybody in the world.
Hi everyone, Matthew Kruse at Comstock Investments. I have with me David Kruse, the founder and chief editor of the Comstock Report. Getting some good rains up there?
We're in pretty good shape up here. There's a little water standing in some of the hard spots in the driveways, and so at this time, and we're coming now over July, things look pretty good.
Well, I know you wanted to talk a little bit about China and crop conditions, so let's jump right in here. Let me pull this slide up. I saw in the news this morning that it looks like we have a tariff agreement with Vietnam. I don't know what that's going to do to help improve markets, but Vietnam had a pretty large tariff because most countries got 10% tariff. Vietnam, I think, had 46% tariffs.
There's a reason for that, and that is that a lot of companies, instead of leaving China and coming back to the United States, are going to Vietnam. Therefore, they're putting a large tariff on Vietnam to try to discourage that.
So it's not a fluke then that Vietnam is one of the first countries to get a trade deal done.
I think they're a little surprised at it, though, too. Whether they agreed to that, if that's the case, or whether this was just imposed on them, one way or another. That is how the president said he was going to ultimately do that. He actually told Japan this week that they were just going to send him a letter and tell him what the tariff was going to be, and therefore we really didn't need any other agreement than that.
Let's talk more about trade with China and where that's at, because it seems like it was a couple weeks ago, President Trump tweeted that the trade deal with China was done and we got it all worked out. And come to find out, it's really not the case. Like, there's a lot of things that need to be ironed out. And we haven't heard much in the way of agriculture. It seems like most of what you read is about the rare earth minerals and all that. So, where do you see things at with the state of negotiations with China?
Well, things have changed since his first term. During his first term, when he did supposedly negotiate a trade deal with China, it focused on commodities and a commitment from them to buy a significant lot more of commodities from the United States. Unfortunately, actually, if you go into that agreement and look at the fine print, there was a loophole in there for them not to comply. Basically, if it didn't meet their commercial needs or concerns, or it was an advantage to them, they didn't actually have to follow through. And so it was a poor trade deal. This time, maybe even somewhat more alarmingly, I don't think agriculture is even the ping pong ball on the table going back and forth. Since the focus has become, as you mentioned, to our need for the rare earths and magnets and their need for computer chips. And the situation today, looks like that's what they're really focused on. And this is just a framework. It's not a trade deal. It's going to take probably months and years to get an overall trade deal done. They will eventually get around to talking about agriculture. But what both countries did in this round of a trade war, essentially, is figure out what was important to each one of them. And that was the primary points that they were negotiating in Geneva. Well, supposedly, we're supposed to get access to the rare earths and magnets. Ford Motor Company was about ready to shut plants here because they couldn't get magnets. In the last few days, they've actually got the agreements or framework signed. Secretary Bennett says that the magnets were starting to come. Ford, however, was still expressing problems, said that they weren't getting what they needed. This is actually a national defense situation for us, too, because we need those rare earths as far as our military. A lot of rare earths going to each F-35. And at the same time, the Chinese don't have access to the very high quality or high-tech computer chips. And so it's important to them, too. So that's where this thing is kind of setting at this moment.
Things are obviously very tense with our relationship with China, and obviously become really popular in Congress and our politicians to kind of bash our relationship with China, and not that some of that is probably very well deserved, but are we able to come back from this? Because it'd still be nice if we could sell them something, and the way things stand now, it just seems like we're not going to sell them anything. And I don't just mean ag products, I don't just mean soybeans, but I mean anything, and so where do we go after this?
Well, if Vietnam got a 46% tariff, I'm pretty sure that, the tariff right now is at 55. Whether that comes down at all, I'm not aware. But I think we're in a major long-term impasse here. I don't think the Chinese are going to come back to us again, looking for other sources of the things they need. Situation, they're now engaged with Argentina, going to get much more closely involved in their soy supply chain, just as they have in Brazil. They have been encouraging Brazilians now to do second crop sorghum. Sorghum was a market that was pretty good for a couple, 3 years here. When they stopped buying our corn, they were continuing to buy our sorghum. And so now we're going to lose that market. I don't think we're anywhere near yet any kind of a resolution that's going to normalize our ag trade with China.
Seems like a long ways to go there. Let's switch over to Canada a little bit. I always thought we had a great relationship with Canada. It seems like the current administration has a different view on that. One thing that's nice is we've had a peaceful relationship with them. Maybe there's things financially that need to change. I don't know. But I always think, what if our neighbor was North Korea? How would our lives be different? But instead, our northern neighbor is Canada, and I think, seems like we've benefited from that. So what do we need to know about trade with Canada?
Oh, you and I, we have relatives in Canada, and we've got along with them a long time. I've actually had several conversations with them in the last few months. One of them, they had a nice trailer in Florida, and they've sold it. And they say they're not going to set foot in the United States again for at least about 4 years or whatever, however long that is. That seems to be the attitude they've had this. They're extremely insulted. They have been our friend, and they think that they've acted accordingly. The president focuses most on trade deficits, and he claims that Canada has a huge surplus with us. And really, you can look at his math a little more closely. When they calculate these trade surpluses and deficits, first of all, he doesn't include services. Well, it's goods and services that you trade with another country, and it happens that I think Canada is our highest purchaser of services. The other aspect of Canada is that we get a lot of energy from them. We get the oil, we were getting electricity, and they have a very heavy oil, and our refineries are built to be able to handle that quality of oil. And we actually have exported some of our sweet because we were getting the heavy oil from them, and we were buying it at a discount, and our refineries were making excellent profits by being able to handle that. If you really look at the overall trade deficit and you put in services and you actually account for a lot of those things that we buy from them being the oil, we don't have hardly any trade problem or deficit difference with Canada at all. But that doesn't fit the narrative, and so they've got to embellish it to be otherwise. But the president has said recently that Canada doesn't have anything that we need. Well, I guess to the contrary, I think that we do need some oil from them. They actually are a great source of electricity, hydroelectric power up there. They're actually some of the cheapest aluminum can be produced in Canada because they have that electricity up there. We talk about our rare earth problems with China. They have about 90% of the rare earth processing in the world. We are building a plant in Texas, but there's a plant that just went operational in Saskatchewan. So they are a source of rare earths. And so to say we don't need anything from them, that seems to be somewhat absurd. The other aspect that we're promoting is the Golden Dome. Well, most missiles will go over the North Pole or the Arctic area, and they're going to go over Canada before they get to us. And so I would suggest that just as we have cooperation today in NORAD, that to have an effective Golden Dome, we're going to have significant cooperation from Canada. And so I realize when the president makes these statements, they're hyperbole for negotiation reasons. They aren't necessarily the truth either.
Let's maybe switch over to corn and soybean yield trends and what kind of seeing for the outlook right now with the crops.
Well, first of all, there's probably some argument going on out here. It seems like we have a controversy over everything on what is the trend line yield. Well, we go to the bean counters or the statisticians, and they will argue today that our current trend line yield is about 183.2 or something like that, pretty close to that, a little over 183. The USDA is using 181, so they're actually projecting a little less than a trend line yield. Last year, they actually predicted 183. And then we got the July report, and I think they reduced that to something like, 178 some or so. Ended up having to put a little bit back on that before they were done. I think we ended up, 179. So that was a big help when they brought the yield down in the subsequent report. I guess my concern is this year that we might actually see the opposite. The way the condition ratings are today, some models show that if there was a 2% deviation to improvement, that we end up with 184 for a yield. And if you did a 5% deviation, you're up at 190. Now, the first thing most farmers will do when you talk about 190 average bushel of average yield is they'll say you're crazy, something like that. If you actually look at what the deviations to the downside off what this trend line is to be. Who says we can't get one to the upside if things happen to go right? This year, I think that the things are going pretty well.
Kind of gives you another picture of what the corn planted acres have done in the region.
And also another controversy out here that when we add acres like we did this year, that's going to reduce the overall yield. I don't know that'll necessarily be the case. Most of the corn belt is where those acres are. And in a situation, say in the south, where there's going to be some prevent plant down there. And so when you have prevent plant and those acres get dropped off, your average yield goes up. That could be, well, the impact there, but I would not be anticipating just because we've got 95 million acres planted. It'll depend on how many get harvested too, that we'll end up with a lower yield as a result of that.
It seems like a lot of private analysts are already at that, 181 for corn. And probably a few months ago before the season started, I would have told you, a lot of people tell you, that 181 is kind of the ceiling. And now things are looking so good. It's like, well, maybe that's a floor, which is, typically when you maximize acres like this, you bring in those fringe acres and everyone, that's going to bring down the yield a little bit. And that has been historically been the thought pattern there. But in a year like this, where we're off to such a good start, yield wise, maybe got to change your perception there a little bit. But what's this?
Well, that's your corn. I took a picture of it yesterday. And that was on July 1st. That's knee high to a giant. Put it that way, for the knee high by the 4th of July. I think he was one of the earlier crops that you've ever planted and maybe ever will. It's fantastic. You have extremely good yield potential. That's what it looks like here.
Knock on wood, hopefully.
Yeah, near Royal, Iowa, yes.
That was planted April 23rd. So yeah. I talked to my input salesperson the other day, just a couple days ago, and I don't know how widespread this is, but he was suggesting there's going to be a lot of 250 to 300 bushel corn. I don't think it's going to do 300. I do think there's some fields and for other guys that, put on heavy manure year after year that might do 300 the way things are going. But even 250 would be very good. And that's difficult to get, 250. But 250 times 4, that's $1,000 an acre. You're still break even. It's break even at a really good yield. So that's what's frustrating. But we got a long ways to go. A lot can happen yet. Here's corn conditions. What do you see there?
Well, what I see is a number of states that are in pretty good shape. I was a little surprised they only had Kansas at 66 because I'm told that the crop there, I guess it's significantly better than it was a year ago. They've got tremendous potential there. Nebraska, they're all at least in the 70s. South Dakota, Minnesota. But where they've had too much rain in Missouri is mostly in the southern part where they don't have any corn. The corn's in the northern part. And Iowa's sticking out like the nice sore thumb. Looks like they must have looked at your cornfield. 85%. And so what I'm suggesting is that current conditions, when they go in, first of all, if they do a model analysis of those conditions, you end up with a little bit above 181 in some of the models, at least that private analysts are looking at. Right now, we have potential, essentially, I think, for record corn yields in Kansas, Nebraska, South Dakota, Minnesota, Iowa, and Wisconsin. And we'll see who else could potentially join that. I've farmed for 52 years or whatever this is. It can all go to heck really fast. But right now, it's not on the forecast. We've had some rains that have actually recharged some of our subsoil. Our tiles are now running here. It's going to take a hailstorm to hurt some of this stuff at this point in time, if this forecast comes.
Well, don't say that out loud. Don't say that.
I know, I can jinx it real fast, and it'll be 170 or something like that. But, last year we did have a below trendline yield on the farms, and that was due to that in June we had, our record historical flood. And then after the flood, by August, we were in drought.
Yep.
So we do know it can happen.
In 3 months we had both extremes.
We had both extremes in 3 months. That's right.
Which seems to be a growing trend.
It is.
Like we're going. You get from flash flooding to flash drought in 90 days.
Well, what's the market going to do, huh? This chart and the next one are both produced by Dave Tolf. He's a technical analyst for RGL. I've been in this business for over 40 years. I've never seen a better technical analyst than what he is. So I do put a lot of credence into what he does. But it helps if you're doing a marketing plan for a particular year, if you know what the market's going to do. Chart here shows that we're still in a major bear market. We're going to have a recovery from the last August low. That's there at 385, you can see. But that was just going to be another correction. and that ultimately we would be dropping to new lows somewhere in the $3 range. And so I did structure my market recommendations based on this. Our old crop bushels, the bins have been swept a long, long time ago. We now have about 50% of our new crop hedged from a standpoint that, I hate getting too much beyond 50% because then you do get into, what's the crop size actually going to be and stuff. And then usually get beyond that, the clients won't do it anyway. And so about 50% level. Took a 85%, revenue assurance, plus we did the ECO, which gets you a little higher coverage yet on that. And we also are in the farm program, and these reference prices have always been supposedly, too low to matter. Well, they have ratcheted up. They're I can't remember off the top of my head, I think around 420 or whatever on 966, something like that on soybeans. I don't rule out that there is a good possibility that we could actually get coverage from the reference prices. And I have a high confidence that if this happens, that Donald Trump does love farmers, and they are making some provisions for funding in their big, beautiful bill and likely beyond, and that there will be some farm aid too. We look at then all the different ways that if this thing happens and the market goes to these new lows, it will ultimately end the bear market, which will be an opportunity for a lot of end users and for people to re-own their sales and things like that. Well, there's ways to make it. But if you combine the hedges, the crop insurance, the farm bill coverage from reference prices, and then add in a Trump payment, we could actually have a good year.
Yeah, it's not all doom and gloom. When I look at this, it seems like this period of time here, 21, 22, 23, doesn't that look exactly like here in the 11, 12 period? And then what happened after that? I mean, you had just market collapsed. You had your rebound here in 14 before we moved another leg lower. And it's kind of setting up that same way. We look at this where you had this big long collapse. You had a rally here. That was your chance to sell at $5.
And our last sale, we hedged July futures at $5. Yep. And then we locked in a 17-cent basis. Well, you got $5.17 cash for our corn locally.
Yep. And we took advantage of that, and we sold some calls as well. But now we're kind of in this phase where we're in the middle of the growing season. The crop is getting larger. The market's trying to determine how large it is. And so my concern is that, and I think Dave Toth expressed that same concern, because I've heard him speak here in the last few weeks, and he says his exact words were he believes we're going to see $3.85 corn before we see $5 corn again. And so, he's basically suggesting that we're going to move this leg lower. How low, nobody knows, but...
Well, we've got enough acres. We've got enough distension in the export markets. And if you end up adding even 2-3 bushels more than what USDA had in their forecast, you'll be there.
But you look even in these, low cycle years, from starting here in 2014 to before we started our bull market here in 2020 or 2019, I mean, you whipsawed back and forth quite a bit from 350 low to 450.
Yeah.
And anytime you basically got above $4 back then, I mean, that's basically when you needed to be selling. Hindsight is 2020, but we're still trying to determine where that new...
Even after the bottom has been made, you went through quite a significant basing time frame there with that.
But if you base it off of that, it looks like we're right now we're in the middle of this whipsaw range, is what Dave Toth would suggest. Yeah. We're in la la land, I think, as he refers to it sometime. We're at 420, and so I'm not saying we can't get back above 450, or maybe if we're lucky get back to 5, but it can also just as easily go down to 385.
Right, I'm going down from where you are right now. There's nothing says you've got to have a reason. I don't think they're giving us good biofuel policy, and they haven't really out of Washington yet. That leaves something to be desired as well. And I think the funds recognize this, and they've been positioning accordingly. Seasonally, it's not quite the right time yet. This is a soybean chart, and essentially it's the same thing. As in that case, the trigger price there, for last August was $9.45. It suggests in here that you could take that out. Everybody seems to think that the USDA's yield's high. It's actually not in a long-term analytical trend analysis. People could be surprised. Another thing right now is that, of course, when last time around, when the Chinese stopped kind of buying our soybeans, it was more or less a switch of sources. They went to Brazil while other countries, such as Europe and things, came to the United States. It sort of was just a mix of what was going on in the world trade. And we didn't ultimately lose, demand as bad as maybe we had feared at one time. This time, I think we have successfully pissed off just about everybody in the world. Europe is not happy with us, and they know that if they go buy a few beans from us, though, that they might get a little favorite treatment. Even there was news headlines this morning that the trade situation with Japan was not good. And we're going to need then, if we're not going to have China at all, we need to find some help somewhere else. Where's it going to come from? Well, time will tell. That chart goes down there pretty serious. You get down below the 945 and wherever you go for a fifth wave down there, you're likely going to trigger some reference prices.
Going back to the growing season, is there an analog year that you see that compares to this one? I read something yesterday that somebody suggested this season is starting to look like 1994. So in 93, we had the flooding. Do you recall 94 and what that was like?
I really don't. 93 was the horriblest year we ever had because of the flooding. Is it really a good analog year? Eric Snodgrass, the climatologist from Nutrient Ag, he tried to do an analog study, and he said he couldn't find one. You can look at something someplace that was similar, but if you looked at the overall situation, there really wasn't a good one. And I think that's probably the case. And that also, if there wasn't, wouldn't that sort of back up that idea that the big surprise could be how good the crop is instead of how bad this time is? You never know.
Wrapping up, any other thoughts on risk management strategy going forward? To my surprise, there's still a lot of old crop out there. I actually talked to somebody yesterday that said they still had some old crop, and I don't know that it was very much, but I figured when we got to $5, everybody would have swept the bins, but apparently not.
All we can do, Matthew, and what we do in our business is give people recommendations, and whether they take them or not is their decision.
When we turn out to be right, we want them to take them.
Yeah, that's right. But
if we turn out to be wrong, then we hope
we end up when we're wrong too. I've had compliments from clients to subscribers in that rare occasion when we've been wrong.
You've been wrong?
Yeah,
what's happened?
Then sometime or another, but
Okay.
but they appreciated it that we owned up to it.
Well, everyone, thank you for watching. Please subscribe to our Comstock Report so you can get the first month is free when you sign up now. So thank you, everyone.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.